Welcome to the Keychain Podcast, where every key tells a story.
I'm Matt.
I'm Meesh.
And today we're giving you an inside look at the people, the partners, and the purpose, but inside the Matt Harnick real estate team. And today we're really fortunate to invite a friend of ours on our podcast. This is Bill McCormick. And Bill, you're going to talk about what you do, obviously, but CK Capital is a short sale negotiation team that we've been fortunate to work with for a good number of years. Bill and I actually did a video a while ago, which really went in depth into a lot of the stuff that they do. And again, we'll talk to you about it because you can explain it a lot better than I can.
Oh, yeah.
But thanks for being here today, Bill.
No, thanks
good
for
to see you,
having
man.
us. Appreciate it.
Absolutely.
I'm so excited because I think you were probably one of the first people that I chatted with when I started with Matt.
Yeah, it's been a while.
I think one of the first ones we did was a short sale, and I was like, brand new to the business. I'm like, what the heck does that even mean? I'm like Googling it. I'm like, I don't know what these terms are. But luckily we had you because you made every step of the way, and every question I asked was never a dumb question. It was always, oh, that means this. Oh, we need this. And it just made it so easy. And I'm sure you do that for everybody, but I felt very special.
Yeah, well, Matt just used the word partnership, and that's really how we feel working with you and your team.
Yep.
Because we're all in it together. And the more cooperation, partnership you have, the easier it does make those transactions.
100%,
No doubt.
100%.
No doubt. And especially because in the short sale, arena, obviously the biggest thing is that there's someone who's, in danger of losing their home and losing everything. And beyond losing their home, obviously there's a tremendous amount of money they could owe. And again, we'll let you get into that. But I mean, this is such an integral part of the real estate world. And I guess just to lead in, I mean, my perception is that, going back a number of years, short sales were really prevalent after, the 2005, 2007 boom. And then, a lot of people had paid too much for their houses. They were underwater. We saw a lot of short sales. We haven't seen as much recently, but how do you feel about them coming back? I see it starting to happen.
Yeah, it's back in 2006, when the mortgage companies imploded, that's where we saw, and that in the multi-listing, in some counties here locally, in the tri-state area, over 50% of the property listings were short sales.
Yeah.
And that's because the mortgage companies imploded and they brought down, and that was the whole bank bailout thing. Back then, though, the big issue was credit quality.
Yep.
Right? The mortgage industry fixed itself. Okay. No doc loans, all that. That's a thing of the past. So we've seen that cycle. But if you go back and look at the real estate industry, it's always been kind of a bell curve. It goes up and it goes down. But if you look at foreclosure activity going back to 2006, if you look at it like a stock, it's been a declining stock, right? Foreclosure since 2006. And then during the pandemic, they completely turned off foreclosures altogether. If you had a federally backed loan, Fannie, Freddie, FHA, VA, USDA, if you had a federally backed loan, whoever was servicing Bank of America, JP Morgan Chase, they weren't able to initiate foreclosure. So we had a bottom. Well, since 23, right, looking at it like a stock, down, consolidation. Now we are back up foreclosures. We are back up to pre-pandemic 2019 levels foreclosure activity.
Wow.
We're still at historic lows.
Yeah.
We're still at historic lows. Typically 2% nationally foreclosure. But what we're seeing today, where that bell curve is really starting to change, is we never went through a pandemic. Where people way overpaid due to historically low interest rates. It was free money. Yeah. So our clients today typically bought in that 2.5 year window during the pandemic and we all saw it. They waived appraisals, they waived inspections, and particularly in some of our markets right now, I just spent a week in our Florida market. I mean, property values in some counties there are down 15% year over year.
Wow.
So the times are changing.
Yep.
The times are changing.
And I just came back from Florida myself, and it was interesting watching their big station down there is Wink News, right? So it was interesting watching Wink News and hearing their take on the real estate market because it is so drastically different than here. And they were talking about things that I've never experienced because I'm still relatively a rookie in this, right?
Well,
I mean, if you look at the path of real estate, I haven't experienced a lot of the stuff that you guys have. Yeah. So this is a whole new path to watch it on the news and hear these things. I'm texting Matt while I'm down there and I'm like, what does that mean? Well, is that coming this way? Well, if it comes this way, are we prepared? And he's like, yes, we have all the players to help everybody.
Yeah.
Like
yeah.
we've got great partnerships that we're going to be fine. I'm like, okay, cool. And like my aunt watched my whole face kind of like just ease out a little bit.
Yeah.
But
if you go into these other markets, it really makes you kind of sit up and go, wow. I mean, we're fortunate enough in this market, our values have held.
Yeah.
And that's why are we seeing short sales? Yeah. Are we seeing distressed property owners? Yeah. But majority that we're seeing today have equity.
Yeah.
They're distressed, but they're not my client. And that's what we do when we go out and teach our continuing ed or lunch and learns. We see, look, there's distressed property owners. As a real estate agent, you can help. But don't automatically assume because someone's missed a couple of payments, or even if they're active in foreclosure, that they don't have equity.
Right. Right. Just because you can't make the payments doesn't mean that there's not equity in the property to be able to do it. So take us back to the very beginning. And by the way, I also want to mention that Bill has a partner, his wife Denise, as well. What was it that drove you and Denise to create CK Capital? Like what does CK Capital stand for, by the way? I didn't to ask you that.
So way back in the day, I was in the local financial market, right? And I worked with a number of capital equipment finance companies. So when we started our company, I didn't know if we were going to be, which we were at that time, rehab, flipping. I didn't know if we were going to be renting properties, but I came from the financial world. So our daughter is Chelsea, our son is Kyle. So CK Capital Management.
I love that.
Had I had to do it over again, because my email is about like that long, so I would have made it something a lot shorter. But how we got started, so I mentioned I was in the financial services world. I literally we had a startup capital equipment finance right over here in Horsham. That I was like number 6, 7 in the door, and we were growing that business, but I just really wasn't that happy doing what I was doing. And I had been in financial for a long time. And Denise was a critical care nurse down at AI DuPont Children's Hospital.
Okay.
So we started investing in properties. So we were buying properties and flipping properties, but it was all investor to investor. Investors at that time, if you recall, when the mortgage meltdown occurred, a lot of these investors started losing their credit lines because of the real estate risk. So we were we were in the wholesale. We would, find a property, put it under contract, negotiate with whatever bank it was, acquire the property, and then go to our investor market and say, hey, we have this property under contract. It's worth this. We'll sell to you for that. That's how we got started. But then in Delaware, which is where our office is in Wilmington, we had 3 things happen. So you already had the mortgage meltdown, right? Well, in Delaware, there was a Chrysler plant that closed.
Yep.
MB&A credit card was acquired by Bank of America, all right? And then you had a Saturn automotive, Oldsmobile plant that closed. So all of a sudden, we had all these realtors coming to us saying, hey, Bill and Denise, I know you work with me with this investor, getting them out from 3, 4 properties, getting them out from under, but we have Joe and Sue homeowner that need help. So Denise and I sat back and said, we got to come up with a different model. So we created our service model, which, we talk about partnership. It aligns with your business because it's pay for performance.
Sure.
Right? We get paid just like a realtor. Right? We do all the work, but we don't get paid until it gets to the table.
Yep.
So I'd like to say that it was, some vision of what was going to happen, but it really was just how do we service the market and help people that were struggling financially. So we stopped rehab and flipping. I'm not good at swinging a hammer. I knew what my weakness and my strengths are, as my wife reminds me all the time. And this is where we ended up.
Wow. Okay.
It's like a come from contribution, which we say all the time. So you saw this missing link and was like, let's fill that missing link.
Yeah. Yeah. And the biggest thing was we in which we'll talk about. I mean, people this is a bad time for them.
Yeah.
They're losing their home. They're trying to avoid foreclosure. So that's where my wife's nursing comes in, her background, because she's very empathetic, and it just comes across when she's talking to our clients.
So for someone unfamiliar with what the terminology actually means, can we put out there also just define what a short sale actually is?
Yeah. So short sale by definition is simply that the homeowner, due to when they purchase the property, due to current market value, they do not have enough equity to pay off their mortgage debt in full. So let's say I owe Bank of America $300,000 and I bought the property during the pandemic. Well, now there's other properties that are coming on the market and now market values are $250,000. Well, if I didn't put 20% down, maybe I was a first-time home buyer, put 3.5% down, VA 100% down, right? I don't have that equity. So as the market changes, folks are, the terminology that's used out there is they are quote unquote upside down on the mortgage.
Yep.
Right.
So underwater. But the funny thing is, there's a lot of newer realtors in the market. You both know that.
Yeah. Sure. Yeah.
And we do a lot of educating, as I said earlier, but when we go out and speak to folks, they've never worked with a homeowner that's in distressed property and in a distressed way.
Yeah.
So we're trying to educate the new breed of realtors that have come into the market, particularly once it came in at the height when it was like shooting fish in a barrel to sell the property. But with that being said, short sales have been around. We've been at this 24 years. Short sales have been around long before we even got involved.
Sure, of course.
Yeah.
So, but the difference today versus back mortgage implosion 2005 and 6 is the mortgage lenders, they have to now educate the consumer when they are delinquent on the mortgage, right? So it starts out with collection calls, then it becomes letters, right? If you don't pay your mortgage, we're going to call it due, we're going to initiate foreclosure action. In Pennsylvania, Delaware, we're in a judicial foreclosure state, so it has to go through the court system, right? Well, the lenders now send letters out, and the lenders say, look, homeowner, we understand you're not paying the mortgage. You have options. The first one is loan modification. You can explore lowering your monthly payment, all right, to where it's more affordable. That typically results in second mortgages being put against the homes.
Which a lot of people in that position don't understand until they're working with us, maybe down the road and they have to sell a house and all of a sudden, what's that $25,000, $30,000 second mortgage? I don't have a second mortgage. Yes, you do.
Yes.
Because you went through a loan modification.
Yep. And that's exactly right. We see a lot of that now, particularly post-pandemic.
Yeah.
Yep.
That forbearance program, mortgage forbearance, which is the payment holiday. And then the second option is refinance. All right. Well, the reality is if you bought during the pandemic at a 3.5, a 4, you cannot refinance to a 6.5. So that really is what we're seeing now is that option's off the table.
Sure.
Right?
Yep.
And then they call it a reinstatement. It's really like a refinance, but basically you don't have to go and redo your loan. So they'll look to reinstate. If someone's past due, maybe they'll make some changes, which maybe they'll extend the term, for an example.
Right. They'll give them another 10 years, 5 years, whatever.
Exactly. And then there's the deed in lieu. You hand the deed over in lieu before foreclosure. Right, deed in lieu is known as a friendly foreclosure because the lender does not have to go through the court system, but it still results in a judgment being held. All right, and then lastly is the short sale. Okay, so the lenders now educate the consumer. You have options to save the home, keep the home. All right, and you have options to get out from under. So I say short sale is simply foreclosure avoidance. It's an offering that the banks offer, and they all offer it. They all offer it to their homeowners.
So, and the issue there is that a lot of real estate agents, us included, certainly don't have the wherewithal and the knowledge to be able to orchestrate that entire process. The homeowner certainly doesn't know it. So that's why it's really important to talk to you guys to take over that whole process. So tell us how that works in terms of, we call you, hey, Bill, we have a property, a homeowner that is underwater. It looks like they're not going to have any equity in the house. Take us from that step. You guys get involved, and then what happens?
Yeah, and that's a really good question. So, typically we ask to be involved as early as possible.
Yep.
Because obviously we don't expect you, nor do you want to be giving credit advice, legal advice, right?
We are not attorneys. We've said that before.
Yeah.
I say that, I kid all the time. I'm not an attorney, but I play one on TV. So what we want to do early on, number one, make sure that client is your client, right? Secure the listing. And then the transition is that we want to educate that homeowner, right? Educate the consumer. Why short sale versus a foreclosure? We walk through the benefits of, and can I touch on some of the benefits for that homeowner?
Of course.
Absolutely.
Please.
So not a lot of homeowners understand that, a lot of times they may know what Betty's house down the street sold for, and they're like, well, geez, I owe more than that. And they may sit on the sidelines because most homeowners say, well, I don't have enough money to pay my realtor, right?
Yep.
But what they don't understand is they forget about, in Pennsylvania, 1% transfer tax. They forget about title company fees. Well, one of the big benefits in a short sale is the mortgage lenders, because there's no proceeds to the homeowner, the mortgage lenders will pay that homeowner's customary closing fees, right?
Yep.
Yeah.
Realtor commission, transfer, title company fees. If they have, here in Pennsylvania, they may have, school taxes, right? Property taxes. They may have muni, sewer, and trash that's out there. Anything that's lienable.
Federal income taxes, right?
Well,
Haven't we?
Well, yeah, federal income tax is a whole different animal.
Well, that's true.
Yeah.
But yeah.
But yet we deal a lot with that as
Sure.
of
Yeah,
late.
yeah, yeah.
But the local property taxes, the lenders will pay those as well. So benefit number one, and this is what we educate the homeowner on, is you're not writing a check for any of your customary closing fees, right?
Yeah.
Benefit number one. Benefit number two is, and this is boilerplate language, all the big lenders, the Bank of Americas, the Wells Fargos, JP Morgan Chases, they issue a short sale approval letter at the end of that process. And we want to see this language in every approval letter for the short sales that we negotiate and facilitate, is that Bank of America agrees to report your debt as settled for less than owed, settled as agreed.
Yep.
All right.
Correct.
The key word there is settled. And then the second verbiage we see in there in the approval letter is that Bank of America agrees to waive the deficiency balance.
Right.
That shortfall amount, right? So for that homeowner, okay, all your closing fees are paid.
Yeah.
Your debt gets reported as settled,
And
okay? And you don't have to pay it back. And the key thing there, and I say this to all homeowners when we're educating them up front, I ask a simple question, all right? Because there are some homeowners that are so frustrated with what's going on in their life. Let the bank take it back, let it foreclose. So when we consult with that homeowner up front, I say, look, plain and simple, you got a rough thing going on in your life right now. Do you want to be a new homeowner again, yes or no?
Right.
Right?
Yeah.
And if they say, yes, I do, I said, okay. The reason the lenders offer this out for foreclosure avoidance is it's least impactful to a homeowner's credit score than if they were to allow the home to foreclose, or worse yet, if they say, I'm going to file bankruptcy, right? Depending on which mortgage person or credit specialist you talk to, most tell us because the debt is settled with no judgment in a short sale, typically 2.5 to a 3 year window, you can go become a new homeowner again.
Versus bankruptcy is what, 7 years?
7 and
Yeah.
foreclosure is 5.
Yeah.
Right.
Yeah.
So when I walked that homeowner through it, I said, this is a pathway. There's a reason why the lender offers you this option, because I said, and let's say we have a divorce situation, right?
Sure. Yep.
35% of our short sales are divorces. They're dual income, right? Dual income families, when they split up, they can't, so it's a trying time for all parties involved. But what we try and say is, whiteboard sitting there. Put all that bad stuff that's going on right now on your chalkboard, right? Your mortgage, your delinquency, all the credit impact and all that. In 2.5 years, that just wipes away.
Yeah.
Right? It wipes away and you can start fresh again. And that's really what it is. It is being able to mitigate the negative impact on your credit. And here's a scenario I walk a homeowner through, okay? So today is September 24th, and you go to the title company and you settle on your short sale today, all right? Guess what doesn't happen in October? You don't have a 30-day late on your credit report anymore because you no longer have a mortgage payment, right? And then that phrase I used earlier, we will report the debt as settled to the credit bureaus. Typically 90 days after settlement, JP Morgan Chase goes to Experian, Equifax, and TransUnion, and they report the debt is settled. If I have a $400,000 mortgage, right, that $400,000 mortgage comes off of my credit report. So the bleeding stops with your 30-day late, right? 30 days after you close. Within 90 days, that loan balance comes off your credit report. Well, you know that one of the big drivers, other than how you pay your bills, is your debt to income ratio.
Absolutely.
Right?
Sure.
So what we walked the homeowner through is that, you have a $400,000 mortgage and here's your income level. By, just do the calculation. Well, if your debt load goes down by $400,000 and you do nothing, you're going to see your credit score improve. And what we say to homeowners obviously is credit is so subjective. Being a financial guy, everybody's credit's different, right?
Yep.
Some homeowners are maxed out on credit cards. They're late on this bill. Other homeowners, it's just the property that I need to get out from under. So with that being said, the end is really that first 90 days, right? I always say start with the end in mind. All right, your credit pain will stop after 90 days. It'll just take you 2.5 years before you can get a new mortgage.
That's amazing. So someone can be in the midst of all of this, and let's, again, hypothetically, 2.5 years later, they could be buying another house. They could be just out from all of this, put it all behind them.
Yeah, and we've done enough over the years, and they have not all been easy, right?
No,
and it's more not so much transactional, but working with the folks that are distressed. Right?
It's definitely relational.
Sure. And I say this all the time when we're teaching at the broker level or in a class that we talk about building long-term customers in our business, right? If you help these clients out of one of the most difficult times in their life, and they kind of pop out, come up underwater, they pop out at the other end, they will remember you. They absolutely will remember you because you gave them the pathway to new home ownership and got all the bad stuff behind them.
And I was thinking, because as you say, I mean, we've known each other now, it's got to be 12, 13, 14 years.
Something
it's been
like
a
that.
long time.
Yeah.
And there's been a number of short sales. And I was thinking more recently of one of the more recent ones we've done where it was an estate. So I don't know if you remember. I'm sure you remember.
I remember. I don't remember much, but I remember that.
So what happened was the homeowner passed away. Her sister was the executor of the estate, and there was no equity, and the mortgage wasn't being paid. And we were able to. It took a while, but we were able to successfully, do a short sale.
Yeah.
And in this case, it was the executor of the estate who lived in Florida, and then she moved to a different country, as I recall. And there was a lot of emotion tied up in it first because it was her sister who had passed.
Yeah.
And then after that, it was like, well, I'm not getting anything out of this. Why should I bother with all of this? And there was a lot of talking to her about, and ultimately she understood and agreed that she wanted to do her sister's memory, the memory of her sister. She wanted to do right by her. And that's what ultimately, made it possible, made it come to pass. And I seem to recall this was like a 1 to 2 year process. Like this was a very lengthy, for us anyway, I think it was probably the most lengthy short sale negotiation that you did the negotiating, but in terms of the process, it was probably the longest one we've done. Typically, if there is such a thing as typically, what would you say is the range of the average length of time that this takes?
Yeah, and it's funny because that's been coming up a lot lately. And whenever we're engaging with folks, I always ask the question, were you in the market back in 2006 and 2007, right? Prior to the mortgage meltdown, the process for short sales, we would work with that homeowner. And the analogy I always use is think of it like you're applying for a mortgage, right? But instead of proving why you can afford a monthly payment of $2,000 a month, you're now trying to say, hey, Bank of America, Wells Fargo, here's what's changed in my life, and I can no longer afford that. So back in the day, right, we used to send, literally, it'd be a 3-ring binder.
Yeah.
2 years of tax returns, 2 months of pay stubs, 2 months of bank statements, a written hardship letter explaining. We would overnight that. We could get short sales through the system and approved in 3 weeks.
Wow.
Right?
Wow.
Mortgage meltdown.
Yeah.
We went from 3 weeks to 9 months. right? And that's during that time period.
Yeah.
And over time, obviously, the industry's changed. Foreclosures are down, right? And property values are up. But what we saw back then, and I will tell you here locally, down in Wilmington, Delaware, Bank of America had 2,000 employees in Wilmington. All they did was process foreclosures, short sales, right?
Oh my gosh.
Wow.
That group is completely gone. The
Sure.
building is still for lease, completely empty, and anybody that was remaining is down in Charlotte now. Wow. So, but with that being said, now we're more realistic timeline is about from offer submittal through the financial review of the seller. The lenders do an appraisal on every property now to compare against a buyer's offer.
Sure.
And then it goes to the investor, Fannie, Freddie, USDA, whoever owns the mortgage for review. Our typical turnaround time we're seeing now is about 45 to 60 days once the offer goes in through the bank's due diligence until they decision the short sale. If the buyer's offer is in line with the bank's appraisal, they issue the short sale approval letter. That serves as a payoff, usually good for 30 to 40 days to allow a mortgage buyer to get their financing.
Sure,
right?
that makes sense.
So typically what we say is you're looking at a 60-day window once it's under contract, and then an additional 30 days to get to the closing table.
So going back, like I remember the very first time that I didn't really even know what a short sale was. I mean, I was a brand new agent, and I did have a client, and they were in that situation. And I remember thinking to myself, you know, I was reading up on it, looking on the younger internet at the time, and like what do I do? And I remember the daunting task of like, oh my God, I have to be on the bank like 10 hours a day with these people, and they don't know, they're going to ask me for these documents. I'm going to have any idea. So I still think there may be some reluctance for agents to want to take on the whole short sale process, which obviously this is why we're talking with Bill, because Bill and Denise, what they do. Tell us, like, sort of procedurally, like when you get involved, like what do you do to get you know, to get started?
Yeah, and the first thing that we do is we get authorized by the homeowner, okay? Because you cannot talk to a lender without written authorization to do so.
Yep.
And our goal for our realtor partners is we do not want to take you away from your business. And I'll go back to 2006 through 2010. We're a niche business, right? I mean, we negotiate short sales. That's what we do and have always done. Back then, you had some attorney offices that were doing it. You had some title companies that were doing it. And they were doing that as a function to get to the, hey, I want to get paid with the title insurance. And they realized there's too much time and, you know, man hours.
Yep.
Well, but our real competition back then was not the attorneys or the title companies. We had more realtors on the phone with the lenders. You know? So when we came up with, you know, this service model, what we said to the realtors, obviously you know this, is we don't want to take you away from your business, right? And, you know, we always get this, well, what do I have to do different in a short sale? I say, would you go out and do you meet with your client and you pull comps and CMA and figure out what the property's worth? Yes. All right. Do you put the property in Bright MLS and list it? Yes. Do you put it under contract? Yes. Do you go to a settlement table? Yes. I said, your role as a realtor does not change in a short sale. We do that middle part, which is in the multi-listing, it's subject to third-party lender approval, right? Well, we're the ones that go and take that homeowner, the contract, and we get all the financials, right? Which I will tell you, it's not as cumbersome as it used to be. All right, the lenders aren't requiring that level of detail anymore.
Good.
But our goal is to allow you to focus on your business. And we used to talk to realtors back then, and it was a badge of honor. Oh, I'm on the bank. Yeah, I'm on the bank on the phone with them for an hour. Well, that means you're not doing real estate for an hour.
You're not lead genning. You're not going on appointments.
No.
Like,
and the biggest thing, and this was more of a cautionary tale, all right, your E&O insurance does not cover you for debt negotiation. It does not cover you. It's, you know, you always talk about stay in your lane, right? Stay in your lane, do what works.
How many times we say that?
Yeah. You know,
daily. Almost daily.
I love you, but I wouldn't want you doing my home. I wouldn't want you doing my home inspection.
I don't want to do my own.
And I know you trust me, but I'm sure you don't want me doing surgery on your knee, right?
No. You wouldn't call your doctor to represent it in court.
Yeah.
Right.
Yeah.
Exactly
Yeah.
right.
Yeah. So from that perspective, we work with that homeowner, educate them first, make sure they understand the process. And the process is simply offer goes in. The mortgage lenders have a position internally called a loss mitigation specialist. Sometimes they're called negotiators. And I liken them to like a quarterback, on a football team.
Sure.
They're not decision makers, but let's say the loan is a Fannie Mae backed loan. All right. Fannie Mae is going to require a sales contract, a listing agreement, an MLS sheet. They want to see a buyer pre-qual letter, right?
Yep.
And then they may say, okay, I want 30 days of pay stubs and 30 days of bank statements. All right. Then they follow Fannie Mae, whoever they're servicing for, the investor, they follow their guidelines. And then once the package is deemed complete, then it goes to the next queue, which is valuation. That's where they order the appraisal.
Yep.
Okay. Once the appraisal's completed, all right, then it goes to the next stage, which is an investor review. At that point, Bank of America, Wells Fargo, they're not the decision maker. They are billing and collecting,
Yeah.
right?
Yep.
They're billing and
Yep.
collecting. So ultimately, it's the investor, Fannie Mae, I'm using them as an example. Fannie Mae will determine, here's the appraisal, here's the buyer's offer, we're within 5K, let's go ahead and we'll approve the short sale.
Yep.
If the buyer's offer is a little bit lower than Fannie's appraisal, they'll counter that buyer. Once it's done, all right, that's the investor review. Then it goes back to the bank, say, look, your short sale's approved. They issue the approval letter. So look at it like offer goes in, assigned to a mitigator, appraisal completed, then it is with the investor. All right, then it's back to the mortgage lender for the approval, and then it goes through to closing.
So one of the questions that I'm sure is on everyone's mind, because as we've talked about the process, I think our viewers out there, and certainly we already know about the amount of work that goes into this. I'm sure everyone's asking the same question, and I love the answer to this one. How do you get paid?
Yeah, that's so. I like to say this all the time, and which I alluded to earlier. We get paid like a realtor does.
Yeah.
Right, we have a flat percentage that we get paid just like a realtor, and it's a little unique because if you recall during the heyday when there were so many short sales, the mortgage companies were starting to knock commission down, right?
Yep.
And it made it very difficult for all of us to get paid in a short sale. So we have a model where we actually get paid by a buyer, all right, but it can actually get offset out of the transaction. Because the sellers don't have any money, right?
Yeah.
Correct.
And the one thing, and this is what I'm really trying to help educate the realtor community today, is right now, post NAR settlement, most mortgage lenders on short sales are willing to pay listing agent commission and buyer's agent commission.
Yep.
Right? So that's one big benefit that we haven't seen them say, have the buyer pay their client. Yeah. So we basically say, look, put it in the contract, buyer's agent, when you write it, all right, present that. Seller still has to accept the contract.
Sure.
Right?
Yep.
I mean, it still has to be under contract. But yeah, we want to get paid out of the transaction. No impact to the realtor's commission, no impact to the seller, and make it a wash to a buyer.
Right. And we've usually orchestrated that as a seller's assist. I mean, that's actually been typically the way it's happened, which is great because, again, if you look at it, the seller who doesn't have any money is not paying it. It really doesn't have any impact on the buyer. The agents still get paid. Everyone, I mean, effectively, it's really the bank ultimately that's really, taking the hit, I guess I would say, but in terms of where that's coming from. Which is great because, I mean, they're really effectively hiring you to help everyone out of this situation, help a buyer into a house, help a seller out of a desperate situation, and everyone that's involved in it gets paid. I mean, it's a great.
Yeah, it's a win-win-win all the way around. And it's funny because over time, majority of these lenders now, they have arm's length affidavits or addendums.
Yep.
And from a fraud protection standpoint, they want to make sure that buyer isn't leasing the property back to the homeowner, right?
Or a relative, or
yeah. So on the listing side, you would sign it, a buyer's agent would sign it, seller would sign it. Well, now they have transaction facilitators. So these lenders, I mean, because we're communicating with them for the entire time period through the short sale review process. So they're well aware of companies like ours and our presence, because they know that, we're the one providing all the documents. We're the one doing all the communicating.
Sure.
And with the, I'll say kind of good news, bad news is with the lenders, I mentioned the Bank of America group, that's no longer there. These folks have really downsized their foreclosures, their asset management, their loss mitigation group. And unfortunately, we're starting to see them saying, oh, we're backed up. We need to staff up for what's happening. So I hope we don't see that 45 to 60 day window start to creep up.
Yeah.
Because as I said, we're back to 2019 levels.
Yep.
So, and a lot of mortgage companies will openly tell us, oh man, it's coming. We're seeing a lot of distressed properties and things like that. So, we'll see what the future brings when it comes to that.
And the other thing that I think it's important to bring up is, obviously we're here in the Philadelphia metro area. Your office, you operate out of Wilmington, Delaware. But I think it's also important because we obviously have a viewership that is certainly, hopefully worldwide, at least national. We know that for sure. Obviously, the rules, in terms of what you do and everything is not, there's probably state-specific things, but I know that you can operate nationally in like any market.
Yes. Yeah. And that real estate it's a relationship business, right?
100%.
So
Absolutely.
Where we started in the Philly metro area, basically, suburban Philadelphia, all the way down through Maryland and Virginia, right? That's where our bread's buttered. But over the years, we've expanded that, and it's really referral based, right? Yeah.
I know you worked with a friend of ours in Houston.
Yeah,
I believe.
Yeah, and that's really how we've kind of come to have grown the business. Particularly KW. It's a huge referral base that's out there.
Yep.
Yes.
We are going to Hawaii in 2 weeks in November. We were there last year. And
Wait, on business?
On business, yeah, absolutely.
Yeah.
Well, sorry to hear that.
I know.
Yeah,
How terrible.
But it's a Keller Williams group that we were referred to. A friend of ours who's a realtor at the beach in Delaware was at family reunion and ran into the broker. Well, this broker now owns 3 or 4 offices across the islands and has brought us in. We've been working with them, I think, 8 years now.
Wow.
And the first time we met them was last year. And we went to all the offices. We did lunch and learns, breakfast and learns. We did happy hours.
Again, I'm really sorry to hear that.
I know.
Sorry, Denise.
But believe it or not, because in Hawaii you have Honolulu.
Yep.
You have Pearl Harbor. So every facet of the military is there. Yep. VA loans are 100% financing. So unfortunately, because it's so expensive to live there, it's cheaper for military to buy. But unfortunately, these last couple of years, it started to, mellow out as far as it relates to the property values, and that's why we've seen a huge uptick. But Hawaii, Florida obviously is changing.
Yep.
We joined Miami Association of Realtors 4 years ago, anticipating we were doing business there in 2006, 7, and 8, pretty much through 2010, and then it changed. But we went and established a presence. We have a satellite office in Fort Lauderdale now, and last year was the first year after being there 4 years. Last year was the first year that we started seeing transactions.
Wow.
And then so we're like Denise and I go Monday, Tuesday, Wednesday. We're down in Myrtle Beach with a different brokerage where they're doing kind of a regional where they bring all the independently owned brokerages in. But we have, believe it or not, like South Dakota.
Wow.
But it's all referral based. So it's catch as catch can, but we've done a number in California recently too.
That's wonderful.
Yeah.
That's amazing. That, like, from my perspective, because you said the word quarterback, I'm the quarterback for the team, right? So when I go through and I'm going through transactions, I'm communicating with everybody. As soon as Matt tells me, hey, we're a short sale, we're working with Bill and the team, I'm like, oh, cool, I can sit back for like the first couple weeks because this is all him.
But you get it done. That's the difference.
100%. And I'm always checking in saying, do you need anything from me? Like, if he gets stuck on anything, if he can't get a hold of somebody, I'm right there to pick up the phone and start hounding the people too. So when you're looking at it team-wise, it's 100% a partnership to get our clients to the end result of being able to be a homeowner in 2 years if that's their goal.
Yeah, and I will tell you, and this goes from going back to that word partnership, it truly makes a difference working with you
definitely.
and your team, how you operate. We all have the same goal in mind, which is to get that homeowner out of a desperate situation, enabling them to move on.
And we're also an education based. I think that's something that I heard you say a couple times, and we're the same way. We want to make sure when we're working with you that you understand the full scope of what you're looking at. Like, look at that big picture and make the best decision for you.
Yep.
And that's the goal. Is we don't want you to feel bullied or pressured or anything into anything. We want to make sure that you have every person working towards your goal, and especially when we're not let's say we're not the lawyer of the group, we're not the doctor of the group. We want to make sure we pull that person in, and that's 100% where you come in. And I think your background in finance helps a lot when it comes to that.
Yeah, we try and make it as simple as possible, and we try. The first thing we do when we make that phone call, that initial consult, is try and bring that stress level down.
Yep.
There's nothing more stressful, like in Pennsylvania, the sheriff shows up at your house and they post a package that's 2 inches thick on the front door if you're not home. And then you come home and then it's the embarrassment, the neighbors and all that. And homeowners think that they're going to come home one day, their house is going to be padlocked and all their stuff is going to be sitting out on the street. That's not the case. So the first thing is we try and really take that temperature down, try and set them at ease that, hey, look, you're on a path. You've got a great real estate team that knows how to market your property. Once it's under contract, we'll go to work. And then again, when you come out of the other end, here's what you're going to have the ability to do as far as new home ownership in the future.
I love it.
Yeah.
Perfect.
You ready?
I am so ready.
This is your favorite part?
This is my favorite part. This is my favorite part of every episode. We're going to do our rapid fire round.
Okay. All right.
You ready?
I'm ready.
All right. Coffee or tea?
Coffee.
Early bird.
Like it's even a question.
He was like, duh. Early bird or night owl?
Night owl. Yeah.
Okay. Ooh. I think you might be our first
Only night owl.
Yeah.
My wife gets up with the chickens, not me.
Yeah,
Same.
Me too. My husband's a night owl, so I understand.
I'm better at night.
Yeah. Understand. Favorite local restaurant?
Because we're Delaware people, William and Mary in Hockessin, James Beard nominated. That's our favorite.
Wow.
We'll have to check it out.
Favorite dish at that restaurant as a little sub question?
Oh man, Chef Bill, like we're buddies with him now because we go so much. He has amazing seafood, but his presentation, I would say any seafood dish that he does is absolutely amazing.
Shout out Chef
Have to check
Bill.
it out.
Yeah, go on Instagram, William and Mary, Merry.
Murray. Okay.
Okay. Dream vacation.
African safari.
Ooh.
That's a new one.
Yeah, that's when we can turn our cell phones off eventually when we retire. That's our number one spot that Denise and I want to go.
All right, I love it. iPhone or Android?
iPhone.
Yes. No green texts from Bill.
We have not, knock on wood, we have not had an Android yet, so we'll see. Podcast or playlist?
Playlist.
All right. Dogs or cats?
Dogs.
Yeah.
Is that even a question?
Yeah.
We had a beagle for 15 years. Best dog ever. But I'm just not a cat person.
That's so funny. I grew up with beagles. My grandparents bred them. And my favorite, his name was Squeaker. He was my little buddy.
Yeah.
When I met Jane, my wife, I inherited 2 cats. One of them was not a fan of me, and therefore I was not a fan of her. The other one, he was my buddy.
Well, my biggest problem is I'm allergic to them.
Same.
Me too.
And my oldest.
Yeah,
as well.
I sneeze, my eyes swell up. Yeah.
Same.
The whole 9.
Same. It's not worth it.
Nope. No. Your go-to hype song?
Like at the gym or?
Either at the gym, like I equate it to like you're
an
getting
MLB
ready.
player.
Yeah, like you're a Major League Baseball player, you're walking up. What's
field.
that song? That's
DMX Party Up.
Ooh.
Oh, damn.
Yeah, my 35-year-old daughter, if we're out somewhere, we're in a bar, a restaurant, and that comes on, she looks at me and we head right to the dance floor.
All right, Chelsea,
man.
I think you and I need to be friends because I think we've got a lot in common. Hidden talent.
I don't really have a talent, but I am an identical twin.
You are?
Yeah.
Really?
That's not a talent, but it's
No, but that's
it's very interesting. though.
Let's change it to hidden talent or fun fact because I like that.
yeah. I don't have any hidden talents.
Any talents
I
at
know
all?
of.
Other than being an amazing short sale negotiator?
Not really.
Right?
Okay.
I already said I can't swing a hammer, so I'm pretty
no.
Yeah. All right.
I mean, you flip homes. You have.
used to.
Okay,
Not
well,
very good
that's-
at it, but yeah.
One word to describe yourself.
Oh gosh, whatever word I choose, my wife will disagree with me. I'm very detail oriented.
Yeah.
Detailed.
Okay.
Yeah.
Detailed.
Yeah.
And
I can
Denise
see that.
would disagree with that?
No, any other word I would
any other
word.
disagree with.
Yeah.
So you picked the right one.
I tried to. I tried to.
Watch the wheels turn. Like, get this right. Let me get
yeah.
this right. All right, awesome. Well, you've already given some great nuggets on like advice, but if you had one thing to tell your clients, what would be that one most important piece of advice?
Yeah, I just think of what we are trying to do to help you out is just really live to fight another day, right? You know, it's a bad time in your life right now. Let's live to fight another day. This isn't a long-term thing. One step in front of the other will get you out of it, all right, and let you move on. And whether that be divorce or someone, family member dies, you've lost your job, right? Or you're getting relocated, it's a stressful time. This is a means to an end.
Love it.
I love the one foot in front of the other. I think that's a great way to put it.
Oh, thank you.
Yeah.
Thank you. Thanks for
Yes.
being in today and telling us and our viewers a little more about what you do and how you can help. I know Meesh is going to have your information below the video once it posts, but in the meanwhile, thanks again.
All right. Thank
Bill
you very much. I
McCormick?
appreciate it. Always
CK
a pleasure.
Capital?
Always a pleasure.
Liking
I
it.
love hanging out with you. So thank you so much for allowing us to open the door.
No, thank you.
And thanks to all of you for watching the latest episode of The Keychain. Have a great day, everyone.
Bye.